Good morning. Well, broke the support. Down to the next support. We'll see if it stops here. But we got the heads up warning. I guess it was day before yesterday with sentiment getting to this extreme point there. It could have went higher. I think maybe too many were focused on that 200 MA. And so that's on hold for now. And, 3 days, 4 days, whenever going sideways there and breaking was going to create a move to the downside to the next level, which it's almost at. So looking at the futures there. And I explained about the minor support and the reaction on the way up, why, that's beyond what's directly to the left. But, there's a little reaction on the way up. And, obviously you can't see it on the daily chart and the weekly chart, but, smaller time frames, you can see that reaction. And that's where price is coming down to in 3,900 whole number. And we'll see how that lines up with SPX, but not a lot of support and a lot of overhead supply. But with a move like this, what the reaction is supposed to be, that it now creates support, meaning it starts to go sideways, which it hasn't even begun to do that yet on the 5-minute chart. And the downside momentum is just really not slowing that dramatically. Just looking at the distance between the pivots here, it's an initial turn. There's still time to go in this time period. So that bar's not done yet, but the beginning of a green bar as it enters this support area. And so what we want to see is, pivot, start going sideways if it's going to do that. And with this down move, I don't suspect it, it's going to rally much from there, but we'll see. Now getting below here is where it gets interesting, meaning it gets interesting based on subjective information, meaning there's no support here anymore. Is there anything on the way up, even on the 15-minute chart? Scrunching it up there. Not really. It's pretty insignificant, 38.80-ish. And just looking at this little blip over here where it stalled, as you can see, it just went straight up. So it's got a void down below. And so where it gets into, well, you're right, Alex. It's like, okay, what's going to stop it from going down at this point? The 20 MA will be a focal point. Some fib lines, as far as futures go, a trader pivot line, which will be on every chart, meaning time frame, because it's based on the daily. So those lines go on in 5, 15 hour, whatever. A VWAP, whatever. I don't know. Just looking at this chart, I don't even think there'd be any VWAP here. I don't know, based on a daily chart, it might be, of course, higher time frame. But look, there's nothing here. So what we're going to rely on is what I just said, is that the downside momentum has to slow. Who cares what the reason is? It could be a self-fulfilling prophecy like that. But just like anything, like down here, it's got to start going sideways on a smaller time frame. Where that happens at this point, whether it's here or down here at the 20 MA, which is aligned with absolutely nothing, we'll see. So it's into some support. We'll see if it begins to stabilize. The sentiment was a heads up with the breadth, actually pretty anemic compared to, that move up there, where it spiked up here. And then, it was just like this, giant move on the news. So, whatever went up, really wasn't, the breadth really wasn't seeing that the participation, which there was there from intraday, which you can see. Well, turn this into, let's just call it a 30-minute chart. And, it was the spike up, and this did go up, above 2000. So it was a power move, and then, the sideways price action, it breaks support. And so now it's got to come down to some other level. And I just got the whole number, 3850 on SPX, but it be giving up a whole heck of a lot. Just looking at it's at the 20 MA. You can see the cursor on the daily time frame there. I mean, what indicators do you use to analyze market breadth and market sentiment, and which ones are most useful by professionals? Well, I can only tell you what I use, Fabio. It's nothing proprietary. This is the McClellan oscillator. It's not normalized. There's a normalized one, because if you go back and look at decades of information, you can see how it was much more erratic back then. So I just used the normal everyday one. And so this gets above 200, or give or take, that has reached an extreme historically. And then sentiment is just a total put call ratio. That's a 5 MA. These bands adjust for bull and bear markets, and they're based on a 100 MA around the 5 MA and a 10 and 20% envelope. And, they work really well. The historical norm is 0.80 and 1.2. But depending on the market environment, they don't always get there. So, just through, a little back testing, eyeballing, and, I came up with this years ago with these bands, and it served us really well. But the two of them have to be in agreement. If they're not in agreement, I kind of take note, okay, breadth has reached an extreme there historically, so things might pull back a bit. But when they both reach an extreme, you've got a better, more complete information, meaning sentiment and breadth and extreme together, and likely to get at least a pullback. And now we'll just have to see how far it goes. Now, you would think it's unlikely, and I do think it's unlikely based on this move up, that it would come all the way back down here. But we know anything's possible. Now, the deeper it gets into this wide range bar, the more the idea of, getting up here eventually goes out the window, because now this becomes a very significant area of price resistance. And you can see the rejection. We spoke about this rejection a couple of days ago. We'll pull back 200 for retest is possible. I don't know what you mean by that, Michael. 200 points. When you say 200, it makes me think the 200 MA, but it's not. As long as this potentially holds at the 20 MA, it doesn't come all the way back down here. Just a normal type of retracement after this move up. The 200 period moving average on a 100 chart. It may be, maybe. That's why I said, self-fulfilling prophecies of subjective information. Moving averages are subjective. There's no price support here. So ultimately, whatever's being focused on, as it pulls back, whether it's a fib line or whatever, a 200 period moving average, it's going to have to start creating support where there is none. So we'll see some kind of basing, on a 5-minute chart. We'll see some breakdown failures, so just like that's a breakout failure, this is a breakdown failure. So the price action will tell us the level when it happens. So we don't have to really predict anything. We, at this point, like here's predicting, hey, this is an upside target. Let's see if it gets up here. And now we say it ain't getting up there today. So how far down does it go? Well, here's the last line in the sand, the support right there on the futures. So now we'll see what happens. All this other stuff is subjective, as I said. Spiders, look at where they're at. There was a little support. It's going down. These are bad ticks, and it's beginning to stabilize there. And that's that color just to show the overnight. And so where is it at? About 390, the whole number. There's a little support level right there. And, so that, the next level would be, while we look at the futures and there's nothing there, that pivot high. Well, you see, this was tested on that day where it came down and it tested this level there. And so, on a smaller time frame, it went down there and it came back up. So, this could be as 385, 386, whatever, in here where this low is, could be, our downside target. But, we'll just have to see how that plays out. If it gets down there, and we'll just watch the price action until proven otherwise, we'll assume it's going to keep going down. All right. So last I looked, it looked like a no-brainer for the put side, which was, let me see where it is now. Come up a little bit. Man, these things change so fast. Let's look at 38.25, 38, 38.30. SPX. So as we saw, it's going down, keeps going down. You could wait a few minutes or whatever, but 38.30, is it going to get down there today? Well, I think not. And so the 20 MA is in that area. So I look at that as, in my mind, I look at it as is no way in hell it's going down there today. So take that with a grain of salt, but that's just an initial thought as to the probability of being able to go down there. Yeah, and the 50, the 50 is down further, but Alex, you sell a put spread down here and it gets down to the 50, that's going to be some serious pain. But we'll see. And McGraw's telling me there's going to be 2 Fed speakers on inclusiveness. Off topic comments. I don't know, whatever they're going to say, but look, sentiment gave us the heads up. I pointed out earlier in the week. I mean, this was going down. The 3 versus the 30 was under here. So the last yield curves, where this one was the last to say, hey, who's ever hanging their hat on by, this intermarket relationships relative to a recession, I mean, it's gone. It's gone. So what are you going to say at this point? The consumers are going to save the day when all these prices are going up. I mean, that was a fallacy in my mind to begin with. These people are thinking that the consumer isn't going to start backing away when they start paying these prices for everything that's so high. And, the news starts to trickle down as to the reality of things. And so, we rely on intermarket relationships and intermarket analysis and price action. And so the belief initially was that, the 10-year could get down toward this low, and it just entered this, area of support. The sentiment is what it is mentioned. And, so now the 10-year starts popping back up and, the dollar, a little bit. So we'll see, how aggressive the buyers want to be and at what level, based on this explosive move that occurred. I mean, that's what it comes down to. Well, 38.30, I think is a no-brainer. I mean, and this is stabilizing, these futures are stabilizing here. That premium is this is what I'm telling you, these things move so fast, it's incredible. This little bit of stabilization, and now they zeroed out things, but evaporated some of that premium already. But down here, I think it's a no-brainer. I mean, I would be amazed if we were talking tomorrow morning and I was like, damn, it went down there today. The probability of getting up to the 200 MA is gone. And we'll start talking about it going back down here. So we'll just have to see how today unfolds. Right now, this initial support, as you can see, it's beginning to take hold. But that doesn't mean it. Yeah, below 38.50 is fine. Absolutely. And you got the 20, the 20 MA for the futures and up above, I would say anything above yesterday's high is doable, which I didn't look before, but that would be my initial thought. Anything above yesterday's high, now that it's down here, that isn't going to happen either today. So, this is pulling back. Where's it going to stop? Well, this isn't, broke that support. We drag our little green line down here. And this is lined up with the 50 MA. The 50 is still declining, flattish, and the 20 is up where they're beginning to converge. So, you can see my cursor on the hourly chart right in here would be the downside target as to where the bottoming price action on the 5-minute should start taking hold. That's what I'm looking for until it gets down there, or unless it, for some reason, rips right back up again. That's the downside target where you start to see if things begin to stabilize and, topping price action, breakout failure, flip that upside down, which just to, show you, we take this, what was up, and we take this and we look for it down here. And, that's all we do, right? We take the same price action as this is going down and we look for, just throw that. We look for this down here at the targeted area. Could the last 5 days in the spiders be looked at as an island reversal? Good question, Alan. And I mentioned we had a little discussion in the green room yesterday, actually, about gaps. And it was about this, how it looked on intraday time frame versus the daily time frame. And what I pointed out was that this area, these are inside gaps. It didn't gap away from the whole range. So when you talk about an island reversal, you're really talking about, if this bar was up here at the 200, like it gapped up and then it gapped down. However, I get the idea of looking at it that way as being, bearish, that it gapped up and, came in. But now it's violating support. So whatever you want to call it, we knew it was creating an area of support, and that's been violated. And now we look for it to go down to, the discussion we just had. So, you've got a pop up, right? You can see that it came down. You could look at this and say, hey, that looks like a Head and Shoulders top. Well, it does. Maybe it's not textbook the way you see it in books, but it is. And what is a Head and Shoulders top? It's nothing more than a breakout that fails and has a deep retracement. So, however you want to draw it, that's what it is. Right? And, just going back to the futures, if we can, crunch this up, I guess, it would look more like that, versus having as many bars as it does. But, don't strain your brain as to, names and exactness of things. Look, it went sideways. It was a breakout failure and it's broken support. Odds going down to the next level. We just tend to overthink things in technical analysis because of the brain damage that's done to us by indicators when we get started on this stuff. Anyway, so we looked at the cues. That's our downside target. This had already reached its reference point up there. It led the way up, and it's violating here. There's nothing, and this, just looking at this, it's likely to go down further because it went up further, and it's at this resistance. And we talked about the probability of this underperforming and tech outperforming. Russell coming down, same story there. Bitcoin, so 39.62 and below, you think is safe today? I do. I mean, ideally below 39.50, Rob, because look, the whole numbers and the 50 numbers tend to be where the open interest and in those options congregate there. So they tend to act as, besides the whole and half numbers, as reference points. Those open interest levels act as support levels as well. So ideally below 39.50 to be, take it a grain of salt, no brainer. because it's a far distance away. All right, Bitcoin kind of hanging on the edge here of the cliff. We'll see what happens, I think, into next week. Silver down a little bit, coming in and so on. Things are reacting as you would think they would. And crude oil, just a giant mess. So there you have it. We'll see how the day unfolds, but looking for things to move lower to those support levels, and we'll see how they stabilize there. 38.50 and below thing. And so as these markets, this starts to pull in a little bit, you should get that premium by the open. All yours, Dan.
Good morning. Hopefully I can talk a little better today.
You sound good.
Thanks. So the market is doing exactly what I predicted to 100%. I mean, I was bullish as can be here until we weren't. Yesterday gap, I said this on an hourly chart is an inverse head and shoulders. I'm sorry, a regular head and shoulders with a price point. And we're gapping under it, we're range bound, but I was saying, what's going to stop this? And I said one of two things: bad earnings, which I think we're through most of them, the big daddies. And secondly is a Fed guy or gal opening their mouths and talking back the market. And that's exactly what Bullard did today. He's now talking about Fed funds target 5 to 7%. Whereas before those comments, I think people were thinking it was 5 or a tad under. So that, and I was listening to Barry Sternlicht, Starwood, I guess, hedge fund, capital group, whatever. He's a smart guy. I love listening to smart people. He said so many interesting things, but he because he's in the trenches. He knows. He's not talking politics. He's talking facts. And he's like, man, a recession's coming. Greg, he talked about with like historic conversion spread yield curves right now. He says a recession's coming. It's already here in housing. It's they're going to kill, and he's bashing the Fed. They're going to overdo it, as we predict. They're going to crash the economy. So anyway, but he's saying with Bullard's comments, he's like, you don't want to be in equities. And that's kind of a wake-up call. But for us, we trade the charts as always. My IRA is still flat. I didn't get in on this gap up. So we're traders. We'll trade up, down, sideways. We only did one earnings trade last night, Cisco. So even in a down market, it's acting great. 46, 30-minute high. This is a long also. This is a little, call it whatever you want. It's not a flag per se, but it's deep retracement, bullish price action. Next target, 48 to 50. So 30-minute high. I like this thing long. Davos. Oh, thanks, Davos. And there's some housing numbers this morning. Now, housing was also bullish. Price action here. We have our eye on a couple. Look, so I see that it's down here. Well, see, now it's deeper. Shoot, now it's gapping down to 16. I was going to say, if we hold 50% of this, it's still constructive. But if you look at the weekly, it's still within, because this one's including the gap, right? So the 60%, the $60 level on the weekly is a third retracement, which is totally fine as a 1, 2, 3 with a monster retest pattern. And you can see the retest on the monthly. So we actually sold naked puts in Home Depot yesterday, and I said this is a directional over yesterday's high. It's bullish daily, weekly, monthly. And then some other things in that sector that we're watching. FND here is a flooring company. Look at that. Look how similar this trades to housing. They're not identical, but amazingly similar. So that's on the list. I know Alex and McGraw are looking at Costco here. I just like Home Depot better as a directional because this is a nasty reversal that you got to deal with. Whereas Home Depot, you don't. You don't have that nasty reversal. So I like Costco for a put spread, but Home Depot for directional. Ardex here. I don't know what's up. Big gap. If that's your style, it might set up. A Whirlpool also in the housing sector. Monthly is much weaker. And we're going to do this MT live one of these days, called, picking the two best stocks within a sector. I call it the optometrist A/B test. So notice how this monthly is nowhere near as bullish as Home Depot. See that? The Whirlpool still moves with housing sector. Aura getting whacked here. This was an incredibly bullish rectangle consolidation. And I checked, it's not earnings, so I don't know what the news is. But that's quite a shock gap. All the way back down, negated that. That's ugly. Shorts are not going to be easy today, but yes, that's absolutely, Thomas. That is a beautiful sell setup reversal at the 20 closing. It triggered bearish 15. So yes, I would say that is a very good candidate. But I personally am not shorting anything unless I get a bearish bias in the horseman, which is always the case. SQM. Now this had earnings. It's a buy setup. Buy setup gapping up a little bit. So that's why I said give it 30 minutes. If it can take out the high in 30 minutes, we'll sell a 1DT put spread. Click here was a bearish gap to 41, but it's kind of in the excessive gap category that I would consider a 1DT put spread. I don't see a gap. So talking about housing, look at this thing. I actually typed it in as a typo, and my eyes lit up. So this is beautiful, beautiful bullish consolidation in this igniting bar. Look at the weekly. Look at the monthly. Target is 5,000, 5,100, whatever. So the only downside is it's a $4,400 stock. But if you could just put tape over the price, what's today, Thursday? So Tuesday's high is your entry on this thing. That's a beautiful pattern. All right, triple W, we're still short and in trail mode. Trip, we're short in trail mode. Nice, nice. I move stop to break even. All right, see bottom right, Sequino now taking out the lows. So there's 90% chance it's just going to be invalid. All right, what can I get filling? Was it Cisco? I don't know. I can even start looking. I'm bidding a penny to get out on Cisco. But yeah, 30-minute high, I like that. See how we're
I should
kind of,
expect that tick, it's pretty low, almost to minus 2,000. Retracing right up.
almost hits, yeah, well, that's a climb. I like sure being trail mode if I were you. All right, trip. All right, what do I got going off here? All right, I got filled in my Cisco to penny. That's what it was. So, Greg, remember that trade?
Mhm.
Sold 44 cents, just closer to the penny as it was falling. So